My strategy can be described as mainly momentum-based approach with heavy emphasis on advanced technical analysis and market sentiment. And basically, I am solely concerned with the technical analysis of a stock. That's going to be my niche, if you will, where I can tell you with a very high level of predictability and certainty that we can expect a stock to move in this direction based off of what we're seeing take place on within the technical analysis. So what are you going to learn today? Well, again, volume profile analysis and high probability trade selection. So volume profile analysis is simply being able to read what the volume is doing. All right, volume precedes price, and this is going to tell you when a stock and with what magnitude it is going to move. I'm going to show you between these three factors here: timing, precision, price breaks, confirming the trend, trend exhaustion, or price reversals. So this is basically how to assess volume to help us determine the market's intentions across these three critical factors. And again, this is to greatly increase your trading probabilities. So again, we're going to learn a little bit about how this volume translates into being able to select these high probability trades that you can expect to move in your favor when you have this volume profile criteria that has been met. All right, so a trading edge is defined as a refined approach where the ability to identify and act upon a specific entry and exit point will allow for an overall positive outcome over time. So from a mathematical standpoint, a statistically positive outcome is the goal. Without an approach that satisfies this requirement, nothing else matters. And basically what this means is that if you don't have a specific approach that you follow time after time, day after day, trade after trade, you cannot expect to see any sort of results, any positive, consistent results. Ask yourself what your edge is. You should be able to answer that question. If you ask me what my edge is, it's technical analysis and volume analysis. All right. You have to be able to identify what your edge is. If you don't know what it is, then you need to take a step back and understand what that is. So I know that if I have my volume criteria met and my technical analysis criteria met, we're going to see big trades, big moves in the market. So volume is the most important factor in identifying price movement. Now, volume precedes price. And again, you'll hear me say this several times throughout this presentation, but it's because you have to understand that concept in order to be able to actually put this into effect. So understand at the very basic principles of market structure that in order for a stock to move, it needs volume, right? A stock will not move up or down if there is no trading activity. So the more trading activity you have, which is volume, the more you can expect the volatility to be, which is movement. As day traders, we are looking for movement, short periods of movement to profit, all right? And if you can identify when this volume is coming and going, this will help you identify these precision points at which to not only take a trade, but know when the move is starting to become exhausted. And also when the move has become exhausted, when a potential reversal in price is about to happen or very close to it. And what this allows us to do is be able to take the most from the moves that are occurring, right? It's not jumping in for 10 or 15 cents, with the stock to go on to move, several percentage points or dollars from your actual entry, right? By being able to read this volume and the volume profiles that occur at these precision price breaks, again, will keep you in the move for a longer period of time, and this all means bigger profits. All right. So again, understanding that volume is the most important factor in identifying price movement is super critical as we go forward here, because again, this is something that will really help you bring clarity to, hey, is this breakout going to work? Is this breakdown really going to be the start of a big trend, or is it just happening on lackluster volume and you have no interest in really being involved in it? All right, I know for me, when I'm looking at a trade, if it doesn't have my volume requirements, I really have no interest in it, even if it does go on to move, because I know that the move is probably not going to be as much magnitude as is with a move that has substantial volume. All right, so let's move into what is volume and volume analysis. All right, what are they? Volume, as most of you are probably familiar with, it represents the number of shares or contracts that have been traded over a given time period. Traders like us, they rely on volume as a key metric to gain insight into several important factors, including the immediate liquidity of an asset and to measure the potential of an impending move. So for me, when I'm looking at a trade, I need to know that it has, one, a lot of volume, two, high relative volume. And what that allows me to do is it allows me to position how much liquidity does something have, right? If it doesn't have as much liquidity as, another trade, then I'm probably going to size down, right? Because I know that the chances for a slower move or potentially more volatility, since it's a little bit lesser volume, that brings upon a little bit of extra risk. So I can use this as a measure to size into my trade. All right. Volume analysis. So this is an advanced technical trading approach that involves a careful analysis of volume trends and profiles in conjunction with price movements to determine the significance of the changes in securities price. So what this is doing is it's taking the volume that you see at the bottom of your charts, and instead of looking at it bar by bar, you're now looking at it in more of a broader context, a higher level approach, right? And trying to see the trend of volume. Is it increasing? Is it decreasing? Is it staying flat, right? What signs are there that there may be an impending move coming or no move at all, right? For most of you, I know it was for me when I started, I had this graph at the bottom of my charts that was different, different colored bars that was showing the amount of volume that was taking place. I never really thought much of it just because it was by default included on the chart. So I never really paid much attention to it. It didn't really mean anything to me at the time. But as I started to be more involved in the markets and spent more time studying how volume affects price movements, it is very clear how volume affects the price. So for most of you, again, start paying attention to the volume profile in relation to what the move is actually doing, right? Is the stock ramping higher, and is there volume coming into the move, or is the stock moving higher and the volume is decreasing into the move, right? There is a big difference, right? It's not just that the stock is moving higher. What's the volume doing? Is it supporting the move, right? There's a huge difference there, and I'm going to show you some examples as to why that's a huge difference and how it can affect your trading decisions. So again, when you start watching moves from here on out, pay attention to what the volume is doing into the move, right? Ideally, what you want to see is you want to see volume support the move, right? So what does that mean? Well, that means you want to see volume increasing as the move is occurring. That's telling you that there's real buyers and sellers, that the trend is real, and that you're likely to see continuation with some sort of magnitude. If a stock is moving and the price breaks through your breakout point or breakdown point, but there's no volume to support the move, guess what's going to happen? False breaks that all of us have probably been caught in. A lot of us probably continue to get caught in, and you try to figure out how to avoid those situations, to avoid false breaks. It's volume, right? Follow the volume, and you will definitely be well ahead of the curve on what type of movement you can expect to see. All right, so follow the volume, right? Follow the volume. What is the volume doing? This should tell you, are you going to stay in the trade? Are you going to get out of the trade? You're going to start taking profits, or are you going to even add into your trade, as I do on many of my my positions, because if I have high liquidity, which is high volume, and there's volume to support the move, you can bet that I am adding into my trade when probably most people are taking profits. And that's the difference of being able to show or lock in big profitable trades. All right. It's counterintuitive, yes, because we're all human. We know how hard it is to get a profit. So when we see profit on our screens, we do what any human would do, is take the profit, right? That's why adding into the move as it's going in your direction or in your favor is counterintuitive. Yes, it's difficult to do, but once you understand how to do it and why you're doing it, you will definitely see a huge difference in your trading results. All right, so follow the volume. Volume precedes price. Again, we talked about this several times. How is there volume ramping up as it's breaking, or is there just no volume, or is it still decreasing, right? If the volume is increasing as you start to break out of the bull flag, that's probably telling you that it's going to move, right? Volume comes before price, right? Or if the volume's flat or decreasing before the move, probably need to be really careful or not trade it at all, because it's likely that the move is not going to be anything real, or it's going to be a false break. All right, so volume is the only indicator that is needed to accurately predict price movement and in turn produce momentum. Volume is a function of herd mentality, which means that as the volume increases at key price points, so will the magnitude of the move. For example, the beginning of a trend. Okay, so when I say the volume is the only indicator needed to accurately predict price movement, what I mean by this is that you really do not need any sort of oscillating indicators such as RSI, MACD, stochastics. Any of that stuff is lagging, which you may have heard before. All that stuff is going to do is give you an idea of the overall sentiment of the stock. Okay, yes, a stock could be strong, but is the move really going to continue? The only way you'll be able to accurately predict that is by utilizing volume. So you can get rid of all those other indicators that you may have on your chart that are probably causing you paralysis by analysis, and simply just follow the volume profiles. And again, it'll put you ahead of all those indicators, and that by default puts you ahead of 90% of retail traders. You'll see on my charts that I only use volume and I only use the daily technical levels. That's it. I don't use any moving averages. I don't use any oscillators. It's all reading the technicals and the volume. Okay. And again, volume is a herd mentality, which again, that just means that as you see more volume pour in, it means a lot of people see the same thing. All right. And as momentum traders, herd mentality is actually somewhat of a benefit to us, because we can become part of the action and trade the move that's occurring. All right, so we want to see herd mentality because that's going to be volume, which volume means liquidity, volume means magnitude in the move, and all that stuff equates to profits. Okay, so now that we've covered the basics of volume and market structure, I want to move into a few examples where I'm actually going to show you visually how to interpret what you're seeing on your charts. Right. So first off, what you see here on Twitter is you'll see that you have this first move up. All right, you have this first move up here right out of the open, and it's a strong move. You got a huge volume bar at the bottom, as you can see here, where you, let's see, my pointer, right here, you can see this volume bar at the open, and you get this surge up, right? So really nice move to the upside here. And then what happens here is on the first pullback, look what happens, okay? Look what happens. There is a decline in volume as you pull back, right? There's a decline in volume as you pull back, which is what you want to see. Why is this what you want to see? Well, if you're looking for a stock to continue, you want to see low volume on the pullback. And what that's telling you there is that the volume on the pullback is less than, or decreasing and less than the opening move or the initial move. And all that's telling you there is that the sellers are less than the buyers, right? So there's more people trying to buy this thing than sell it. And then look what happens as it starts to resolve, right? As this trade starts to resolve, it hits this the VWAP right here, and as it starts to revert back higher, look what happens as it starts to revert back higher. Look at the volume spike. Okay, so when I'm watching this, I start to see the volume spike up and this stock start to resolve higher. I know instantly that this is probably going to ignite a bigger move or a trend. And I want to be a part of it because the move is going to be real, or at least has a very high potential of being a real move that will continue. So as you can see, you have low volume on the pullback, and then you have a high volume resolution. And that's going to tell you that this is the point in time where the move is ready to get started, or the best opportunity that you will have to get in the trade for continuation. All right. So that's all you want to look for is when you see a pullback occur, you just want to see that the selling on the pullback is less than the initial move up. Okay. Look at the next move. How this second pullback worked is as you got that volume spike higher, what happened next is look at the volume decline, right? The volume decline on this pullback, pullback, pullback. As you start to resolve out of the bull flag, if you will, you'll start to see the volume ramp back up, right? The volume starts to ramp back up here on the volume profile, right? It starts to ramp back up. You start to see that you're breaking the bull flag. You've obviously got a strong stock. It's holding a higher low. The volume is starting to ramp up higher as you're breaking. Entry, right? Entry, and then it moves. Nice move there, continues higher the rest of the day, right? So all you're looking for here is volume profiles to be in line with the trend that you're trading, right? What you don't want to see is high volume on the pullback. If you saw the volume on the pullback to be higher than the initial move, then it's likely to fail or completely reverse. All right, so just being able to identify when that volume is starting to come in, that's the point in time at which you will look to take the entry. Now, some of you might be asking, well, you're on a 1 minute chart, and by the time that 1 minute volume has printed, it's already made the move. That's true, but what you're watching for is essentially you're watching the volume profile just as if you were watching a geometric pattern such as a bull flag play out. Okay, so think of the volume down here as a bull flag, right? You get the initial move higher, and then it pulls back, right? Same as a bull flag, and then it starts breaking out. So once the volume starts breaking out of that apex, which is right down here, as that volume starts surpassing that level, you know that the volume coming in is going to be strong. So you have to do some anticipation, but by trading that general pattern, you can anticipate the move, right? So I'm buying here as I see the volume ramping up past that low pullback volume, and I start to take my position and then look for the volume to continue to pour in. All right, so that's a really good example as to how to read the volume profile. It's pretty straightforward, and just looking for the same pattern you would look on your chart of the stock that you're trading. Right, if you see a high volume spike again during the pullback, it's likely going to negate the pattern or negate the move. The move probably won't go anywhere. All right, so that's one example of how to read volume profile. I want to move into one more here that will tell you a couple things. There's a lot of things going on in this chart, but I want to show you a couple things of how you can use the volume profile to tell you multiple different things in one single trade. And remember, we talked about how volume can do three things: confirm price breaks, it can confirm trend, and also can tell you exhaustion or price reversals, where you can very clearly see a volume ramp. I remember what I talked about in the beginning is you want to see the volume supporting the move, and volume supporting the move is an increase into the move. Right, if you have volume increasing into the move, then you're likely to see a move with some significant magnitude to it. All right, and as long as that volume keeps pouring in, that stock is likely to keep going. All right, it's only when the volume begins to subside that or reach an apex that the stock is no longer to continue. So what you can see on this trade is an obvious volume ramp as the move begins, as it starts to break down. You see the volume pouring in, and there's no support on this stock until that red line you see there at about 61. Right, there's no support on this stock until 61, which we had marked out again because we're very technical based traders, and we need to know where the next support or resistance is for a couple reasons. We need to know what type of levels we're trading into. We need to know how much room a stock has to move, and being that this trade had a lot of room to move, we were very interested in it. So it's a useful approach to know your levels for position management, trade exhaustion, again, breakouts and breakdowns and all that sort of things. And then coupled with volume can really help you extract the most possible out of every single trade. All right, so here on this trade, you can see the volume started ramping up, continue to ramp up for a long period of time until it actually got to the support point that we had there right at 61. So what happens here is a couple things. You've got volume to confirm the trend, but you also have the move moving into a very significant support level. So what's occurring down here is that you've got the volume at the highest that it has reached, but the stock is no longer going any lower because you're now at a level of support. All right, so think about it this way. If you've got all the volume possible and the stock isn't moving anymore, what is that probably telling you? That's probably telling you that the move is now exhausted. The sellers are now done, okay? Especially since you're against a level of support. So what is that going to tell me? That's going to tell me that the move is exhausted. I'm taking my profits and I'm covering my position, right? Now, could you use this as a reversal point? Since it's an exhaustion point, it could mean that it is a reversal point. Doesn't always mean it's a reversal point. The only time it does mean it's a reversal point is if it's against a level of support, as you can see here. So once you get the full volume ramp and it peaks on the support level and it starts to turn around, that is a reversal point. So in the event that you covered your position, you may want to flip it the other way because it's now holding the support point. The volume is still high and you get a nice move back higher, right? But what we're trying to confirm here is that the trend is real, the move is real, and when is the point to take your profits? When is the final point to be out of the trade? Well, when it's exhausted. How do you tell exhaustion? When you have a ramp and you have the peak of the volume as you hit a support point, okay? So that's really important to understand, is how to confirm trend, how to know when exhaustion or reversal in price is about to occur. All right, so good example there of volume profile. Notice the histogram, right? You get a volume ramp, you start to pull back, and then look what the volume goes flat. The rest of the day, the volume just dies, nothing happens to the stock, right? You may think it's starting to break down here. You may start to think it's breaking down here. Well, there's no volume to support the move, it's still flat, right? So no reason to take this trade. So just notice how you can read this volume profile and reference that against the actual move. Is it supporting the move? All right, so moving on, let's talk about a trade here that is a good example of a volume profile to the short side. So let's take a look here. As you can see, this is a move down, and we get that initial move to the downside and strong volume, right? The first bar of volume is pretty strong. And what happens thereafter is you start to get the relief move, or pullback, if you will. I usually refer to them as pullback or a relief move. And in the case of a trade to the short side, typically refer to it as a relief move back higher. All right, so you get the relief move. Look what the volume is doing on the relief move, right? It's declining. It's declining on the relief move. So what do I wait for prior to actually taking a trade? Well, I want to see a volume spike that breaks the pattern that I'm watching on the volume profile, Okay, so if you look down here, you'll see that where that red arrow is, you'll see that it's essentially breaking the pattern, just like a stock would be breaking a bull flag. It's breaking the pattern. You have that really low volume as you're making the relief move and retesting. And once you get the volume spike, look what happens. This volume spike down here at this arrow, this indicates that the move is now beginning to trend. All right, volume spike confirms the precision price break. One of the three factors we talked about confirms a precision price break, which is now going to confirm the trend, right? Because you had to have volume increasing into the move. Look what happens here. Volume spike on the move down, low volume relief move. Look at those green bars down here, right? Low volume relief move. And then once you start to break again, volume will start to pour back in and ramp back higher. All right, ramp back higher, and there you get the trend down to the lows, and it makes a nice trend to the low of the day. And then look what happens on that low of day bar, a high volume spike, right? That's going to indicate that you now have reached potentially what could be an exhausted trend, and it may need time to reverse. All right, so that's how you can really sit in these moves and extract the most profits by just simply reading the volume profile. All right, not every trade is going to be picture perfect, as you guys know. There's going to be volume profiles that are harder to read. I surely can't read every single one, but I sit very patient in my trading, waiting for these very clear volume profiles to present themselves, because when they do, I know that a big trade is probably going to happen. So that is the importance of waiting for these volume profiles to present themselves to support the move that you're looking at. And then that's when you can become much more confident to actually act on this trade and potentially add into the move and really lock up some nice winners. All right, so that is a good example of volume profile to the short side. Next, I want to show you one to the long side. A really good example here on volume profile to the long side on this stock. But you'll see here, look what happens out of the open. All right, look what happens out of the open. You get this really nice move higher. And remember what we talked about, volume supporting the move. Is the volume supporting the move on this trade? Well, let's take a look at the volume profile. Volume is increasing into the move. Remember we talked about how volume is to be increasing to support the move in order for this to be a move of some real magnitude, right? Well, you have it. You have the move, you have the volume increasing into the move, and there's really no point in exiting your full position until you have some sort of signal that, hey, this trend might be exhausted. All right. Now, what I see here is very telling in that, all right, the first initial move looks to be exhausted. Why? Well, if you look at this bar here, we've obviously got the volume to support the move higher, but we do have a high of day volume bar, if you will, on this bar, which correlates with this bar right here. And then the volume just suddenly drops in half, right? Drops in half on this bar, but still up there, right? The bar still closes up near the highs, but the volume drops substantially. So to me, if I'm looking at that, I'm exiting my position because a potential reversal or the trend has been exhausted. Doesn't mean I can't re-enter, but again, remember, I'm trying to extract the most from every single move that takes place. And that is a good example to show you that while you have volume to support the move, it also tells you at this time that there's no more volume to support the move higher, and you're exiting as this bar closes, which is essentially at this time during the trade, it's still at the highs. So very clear indication of how to get out and maximize the move you're getting from top to bottom on this. And look what happens during the pullback, right? Here's your first pullback or relief move. Look what happens to the volume down here. Look what happens to the volume. It's virtually nothing. So the sellers are very, very light on this, all right? It's decreasing. Every bar it's decreasing. Every bar it's decreasing as you're pulling back. Then look what happens as the volume profile, what's it doing? It's breaking pattern. Volume profile is breaking pattern here, just like it would in a bull flag. So what do you look for? You look for the stock to do the same thing. It's breaking pattern. You're long right here. And again, volume increasing into the move, right? Volume increasing into the move. and continues for a really nice trade higher. Okay, and I typically only will trade after the first pullback. I don't typically trade the second or third ones, depending on how much volume and momentum it has. I may or may not, but typically if I can't get that first pullback to align with the volume profile, I typically am not going to trade it thereafter, at least on a 5-minute perspective. If I'm trading on a faster time frame, a 30 seconds or something of that sorts, then obviously I will trade more than one pullback. But from a 5-minute standpoint, especially after 10 a.m., the volumes and momentum start to subside, and the volume profiles tend to get harder to read because it's not as accurate. It's not as accurate as a depiction because you just don't have momentum to work with. So typically I use it up until 10 or 10:30, and that's when I really am done trading as it is. So, but again, good example of how to understand that volume supporting the move. Look for the exhaustion point, take your profits, look to get back in or re-add on the trade once you get the volume profile to break pattern and the stock also follows suit, and you can see the type of moves that you get. All right, so good example there of really nice, clean and easy to read volume profile move. All right. So now what I want to do is, you've seen a couple really good examples of how to read volume, what you want to see, what to look for, what to watch for. But now I want to show you one that what happens when you don't have volume to support the move. Okay, this is really important. I'm not just going to show you stuff that works every single time. I want to show you what happens a lot of the times when you don't actually have volume to support the move. All right, otherwise known as a false break. So for those of you that may find yourself getting caught in false breaks a lot of the times, I know I used to, until I started realizing how important volume is to have to continue to move the stocks. Um, that's something that you can really use to just avoid that situation altogether. It's very, very rare that we'll get caught in a false break, just because we're so vigilant to watch the volume. All right, so remember the trade that we just looked at. We saw volume increasing into the move, right? Now look at this trade. You have the initial move, but the volume is decreasing. Okay, so that's my first red flag to say, okay, well, am I going to trade this stock? Is this going to be something that I'm interested in if it pulls back? And the question is, well, it's going to be tough because I don't have volume to even support the initial move. So what makes me think there's going to be volume to support a secondary move? Sure, it happens sometimes. Is it predictable? A lot less so than ones when we have the volume on the initial move. So you can see that you have low volume into the initial move, or it's declining, right? It's not supporting the move, just like the trade that you just saw on this one, right? You have volume supporting the move, right? So volume supporting the move. On this trade, you have volume decreasing into the move. So that's my first red flag to tell me that this may not be worth watching. Now, remember what I said a few slides back, is that if you have a high volume spike on a pullback, it's going to negate the pattern, or it's going to probably be a trade that's not going to continue, or it's not going to work. It's going to be a false break. All right, look what happens on this as it starts to do the pullback. Everyone probably sees that red volume bar down here, right? The red volume bar on the pullback breaks pattern of the volume profile. That's an issue, because now I know, looking at that it negates the pattern. But let's say that you don't know anything about volume, you don't really follow volume, you don't know how to utilize or read it, and you start to see this stock kind of curl off the VWAP. It looks like it's going to move higher. You may start trying to buy this right here at 42, anticipate the high day break, because it has a decent looking pattern if you look at the stock chart. But look at the volume down below. There's no spike in volume. There's no high volume surge. There's no resolution in volume. It just stays flat. All right, stays flat. Now it starts to fail 42, starts to roll over, and then look what happens here. All right, all those people that were trying to buy this and push it through 42, for anyone that was there, they get impatient and they sell. And look at this volume surge that you now have. All right, so this is going to tell you a confirmation of trend. Right? Remember we talked about that as being one of the factors that volume can help you do is confirm trend. So look what happens once you get the volume spike, right? The volume spike on the sell. What is that going to do for you the rest of the day? It's going to confirm the trend. Volume spike, selling volume spike. All right, look what happens the rest of the day in this thing. It sells off, over 10% from that initial sell down. Okay, so again, a couple things going on here that if you ask me to tell you what is likely to happen to this stock and I didn't have volume, I couldn't tell you, right? I couldn't tell you. Even if I had volume 6 or 7 or 8 years ago, I wouldn't be able to tell you what was going to happen. But now I can quickly glance at that volume profile and I say, okay, you've got a low volume into the initial move. It's not really supporting it. You've got a high volume spike on the pullback that negates the move. There's probably a 90% chance or higher that this move is going to fail, or it's just not going to do anything. It's going to sit sideways. And the other thing is that it could have a huge hard reversal just like it did here. All right. So that's how to identify trades that, again, could be false breakout, could just be duds, just not going to move, or to help you keep you out of this situation that could be quite painful if you're not paying attention, right? But notice how that even though this trade to the long side didn't work because a lot of factors weren't lining up, it also can work for you on the other side of the trade, right? Look what happens. It signals a trade to the other side. Just doesn't mean that it's out of play. You now have a volume spike, which is going to signal a trend that's igniting to the other direction. Okay, so volume tells a story, guys. Volume precedes the price every single time. All right, again, volume precedes price. Look at how the low volume into the move ultimately ended up telling you what was going to happen to the stock. Right, that's what you have to understand. If you're able just to read a few simple volume profiles, you're going to be well ahead of the game. So that essentially, guys, is volume profile analysis. It's all you need to know. It doesn't have to be complicated. It doesn't have to be hard to do. It doesn't have to take years to understand and learn. It's something that you can literally take this away, go to your trading screen tomorrow when the market opens and look for volume profile. I need really high volume to have really accurate, low risk trades. So Bob has a question. Let's see. What time frame are you watching prior to an entry, and do you stay on that time frame during the trade? So that's a good question. It kind of depends on what time of day I'm taking the trade. And when I say time of day, I'm really only trading for the first hour. So if I'm within the first, 10 or 15 minutes, I'm on a really fast time frame. I'm watching, a 30-second or 15-second time frame where I'm watching for these micro patterns and pivots to form, watching the volume profile on there because it's very clear if a stock has high momentum. And as we move past the first half hour, I probably will switch back to a 5-minute and look for the volume profile on there. And then as I see it start to form, if I start to see the volume profile forming and looking like it's ready to potentially get an entry, I'll dial back down to my faster time frame so I can get that precise entry point. Do I have a tier system to get into a trade? Well, typically what I do is, again, depending on the volume and the potential that the trade has, I usually take about half my normal position size or the size that I want to take on that stock. I take about half of it, and then as it starts to really confirm that it's going to move, I'm going to add into it. So typically I have multiple entries. I never really take one single entry because the trades that we're taking, they have big potential. They're likely to move, several percent, which, I'm looking to be in the trade for the longer period of time rather than just scalp it. So I'm taking more entries than just one single buy or sell. No, the volume is volume, right? There's no, you can't fake volume, right? Whatever's trading is printing. So, the volume is going to be the volume and it will apply in really any sort of vehicle that you're looking to trade. If you watch it in real time, it will definitely make a lot more sense. And that's why I encourage you to put the volume on your chart and make sure you're staring at it, because you'll see the signals that I just showed you. So Chris, once you see that the volume has essentially peaked and the stock is not really moving any higher, especially if you get against a point of support or resistance, depending on the side of the trade that you're on, it's likely to be the point of exhaustion. So that'd be a point in time where I'd likely take off a good portion of my position. Because if the volume is constant, is continuing to increase into the move and it's getting higher and higher, you should see a bigger and bigger move, right? As long as that volume keeps trending higher, then the move is likely to keep going. Volume is volume, and whatever is trading is going to print on the volume. So it can be used anywhere. The whole idea of this is to see that the volume is changing profile so you can be part of the move that is going to continue to happen, right? I'm not looking for quick scalp trades. That's not what this is meant to do. It's meant to give you a precision entry to be a part of a move that's going to take place over a longer period of time, hence a much bigger move, much bigger profits. So how do you know if a macro trend will break or not using volume? Well, again, when you break a level or a support or resistance level or a macro level, whatever it is, you have to see volume through the level. It has to be volume at the trigger.